Today, we're going to talk about Cigna, a health insurance giant that just made a move so big it could honestly change the way we think about healthcare. It all kicked off with their latest financial results, where they literally more than doubled their profits. But trust me, the big numbers, they're just the start of the story. Let's get into it.
And for this, we're not messing around. We are going straight to the source, Cigna's official quarterly report that they filed with the SEC. No spin, no fluff, just the raw data. And what we found in there tells a really fascinating story about where a multi-billion-dollar company is placing its bets.
All right, so first things first, let's look at the headline numbers that got everyone's attention in the first place. And, well, to say they're impressive is kind of an understatement. Okay, check this out. Cigna's net income, their actual bottom line profit, for this quarter was almost $1.9 billion. But that's not the crazy part. The crazy part is when you compare it to last year. It jumped from $739 million. That is a massive increase of over 150% in just 1 year. And if you're looking at it from an investor's point of view, the story is just as wild. Earnings per share, which is a really key way to measure how profitable a company is, more than doubled. It shot up from $2.63 to nearly $7 a share. I mean, this isn't just steady growth. This is like hitting the afterburners.
Which, brings us to the big question here. How on earth does a company this huge more than double its profits in a single year? Was it just a fluke, a lucky quarter, or is there something much, much bigger happening behind the scenes? Let's find out.
To really get what Cigna pulled off, you have to understand that the company is really two different businesses rolled into one. I like to think of them as two separate engines powering the same giant machine, but in totally different ways.
So on one side, you've got Cigna Healthcare. That's the traditional insurance engine we all know, right? Medical plans, dental, all that stuff. But on the other side, you have Evernorth Health Services. This is their services engine, and it handles things like pharmacy benefits and managing super complex specialty drugs. And this is where the story gets really interesting. So which engine is bigger? Well, in this quarter, the insurance business brought in about $11 billion in revenue. Pretty good. But look at the services engine, Evernorth. It brought in over $60 billion. I mean, it's not even close. The difference is just massive.
So here's the absolute key point. Cigna isn't really just an insurance company anymore. It's a health services company that just happens to have an insurance arm. That services engine is now the powerhouse, driving almost all of the company's revenue.
And this huge shift, it didn't happen by accident. Oh no. It's the result of a very deliberate, very bold strategy. This quarter's incredible numbers were basically powered by two massive moves Cigna made this year. At its core, Cigna made a trade, a really big one. They sold off a huge piece of their old school insurance business so they could go all in on their newer, faster-growing services business. It's a classic pivot, just on a, multi-billion-dollar scale.
The first move was all about selling, a really big sale. Now, the fancy corporate word for this is a divestiture, but really all it means is that they're doing some corporate spring cleaning, getting rid of parts of the business that just don't fit their vision for the future anymore.
So what did they sell? Their Medicare businesses. They sold them for a final price of $4.9 billion. This was a really big chunk of their traditional insurance engine, and by selling it, they freed up a ton of cash to invest somewhere else. So if they sold off a piece of the old business, where did they decide to invest? And that brings us to the second, and I'd argue the more important move. Cigna took $3.5 billion and pumped it into a company called Shields Health Solutions. Now, this is a huge deal. Shields is a leader in specialty pharmacy. That's the part of healthcare that manages all the complex, very expensive drugs for serious conditions like cancer. This investment is a massive, massive bet on their services engine, Evernorth. So when you put these two moves side by side, the picture becomes perfectly clear. Sell the old insurance stuff, invest in the new services stuff. Cigna is basically shouting from the rooftops that it believes the real money in the future isn't just in collecting premiums, it's in managing the complicated business of care itself. Of course, a pivot this huge costs a ton of money. So how did Cigna pay for this transformation while also making sure its shareholders were happy?
Well, the SEC filings actually lays out their three-part playbook. First, they raised $4.5 billion in new debt. Second, they used that cash to pay for their big strategic moves, like that huge investment in Shields. And third, they kept sending money back to shareholders through dividends and buying back stock. It's a really careful balancing act, and it's all designed to fuel this transformation.
Okay, so let's tie this all together. What is the single most important thing to take away from Cigna's absolutely blockbuster quarter?
It's this. Cigna is making a clear, multi-billion-dollar bet that the future of its business, and maybe the entire industry, is in managing pharmacies and health services, not just in selling traditional insurance policies.
So, to recap our little journey here, Cigna's profits went through the roof. This crazy jump wasn't just a good quarter, it was driven by a huge strategic pivot. They sold off a key part of their old insurance business and poured billions into the fast-growing world of specialty pharmacy. The message couldn't be clearer. The game is changing from writing policies to providing services. And that leaves us with a really fascinating question for the entire healthcare world. As medicine keeps getting more complicated, more specialized, is Cigna's Big Bet the right one? Are we watching them write the playbook for what a global health company is going to look like in the future? I guess only time will tell.